Well, good afternoon, investors, and welcome to the November 11th, 2025 edition of Bull Sessions. And this is our Veterans Day moment. I have many veterans in my family that all we can do is say thank you and give them a big hug. And I know that all of you out there know a veteran, so don't forget to say thank you today. And we'll just go from there. Welcome to
Mark,
Bull Sessions.
before we get too far away from our pre-discussion, Joyce's hand just went up, so I'm going to unmute Joyce and let her talk to us about what she wanted to say there. Joyce, you're self-muted, so you'll have to unmute yourself. And she's not unmuting, so I'm going to take her hand down. And Joyce, if that was an inadvertent hand, don't worry about it. And if you really want to speak, just stick that hand back up. She does. But you're self-muted, Joyce. You have to unmute yourself. I can't do it from where I'm sitting.
Oh, okay.
There we go.
I've got two mute buttons here. Yes, I was wondering if you had any ideas for ETFs as far as the basic materials go, or the rare materials.
Oh, rare earth?
Yes. Like you did the nuclear, because they just all seem so volatile and unknown.
I know we could put it on the agenda for next week and go shopping. We like to look at the First Trust topical or theme exchange traded funds as one place to look. And then usually when you find one of them, you can look for comparable funds and then start making some decisions about, who seems to have the type of holdings that you're actually looking to pursue. So yeah, we could do that. I will put it on the list.
I will say that I've done a little bit of work in that area, and it really makes a huge difference on how you're going to define what you want to have in the fund to start with. There's not a whole lot of companies per se that are publicly traded that deal in rare earths specifically or even tangentially. So you have to broaden your horizon either a little or a lot in order to capture the companies that you want, but it's going to be part of a larger sample than I think that Joyce might be looking for.
Okay. Well, we can certainly demonstrate that. I didn't want to pile on to this week's agenda because, like as I told earlier, I was complaining a little bit, audience, that I'm getting pulled in 18 different directions, and we're going to probably make this one a little bit short, but let's go ahead and get started with welcome to Bull Sessions. My name is Mark Robertson. The other voice you just heard was Ken Kavula. Good afternoon, Ken.
Good afternoon, Mark.
And we're also joined here by Florida/Indiana's finest, Kim Butcher. Good afternoon, Kim.
Hello, everybody.
And Kim is probably chasing contractors, and that's why she was kind of muted there. And we have Houston's finest, Matt Spielman. Hey, Matt.
Hi, Mark. Hi, everybody.
So good stuff today. We are going to basically wrestle a little bit over Bolstering Buttonwood, our demonstration portfolio here, talk briefly about the Groundhog Challenge, and then we also want to open the door to this Upside publication and just show you why our interest is piqued in it. But again, one more moment of expression of gratitude to the veterans out there. Anything else you'd like to add, Ken?
No, but I just think it's a striking graphic that you've picked this time, Mark, for the veterans. I really do appreciate it and like it, and I know all my uncles and my dad and some of my cousins. I know they all would appreciate the nod to their service.
Absolutely. All right, so let's go ahead and get officially underway here with not the disclaimer, but just a quick look at what's going on in the world. Again, we're going to talk about Buttonwood here today. The current batch of companies in the quarterly, 1/13 of the Value Line database includes all the restaurants and food type companies and Federal Express, which can be an economic indicator. So those are on the banner. And then also there's a $1 trillion bill that there's only one person out there that could ever cash that. And $1 trillion, Ken, when are you going to pay me $1 trillion to run this?
It's Mark, it's just a number that I think is unfathomable to the average person. I even think a billion is almost impossible to figure out what that looks like, let alone a trillion. So
Yeah, I mean,
we're just dealing with monopoly money now.
yeah, and a lot's being made about it in the media, but the fact of the matter is, there's a whole stack of criteria and out of this world objectives to achieve a bunch of options based stuff. And again, I don't know the anatomy of the deal, but do I really care? I don't know. I'm a Tesla shareholder. I suppose I should care more.
Just to be a little bit more specific, Mark's talking about the proposed new salary for Elon Musk that the board has either just voted on or is going to just vote on. I'm not
They
quite
just
sure
voted.
which.
It was approved.
Did they approve it? Okay, I'm not following it that closely, but it's Elon Musk and his salary, as if he didn't have enough already. So
the one thing that was notable was a number of people, investors, either threatened or actually canceled their Schwab accounts because Schwab was voting with the yes vote, with their institutional vote that they check in, right? And so a number of people said, if you're still going to vote that way, we're pulling our money out of Schwab. And it wasn't a small number. Matt, do you have anything?
Robinhood also ran a special to attract them, a 2% rebate.
I'm going to suggest that anybody that thinks that this is never happened in our history before should spend a little bit of time watching The Gilded Age, which is fiction, but it's historical fiction done with a lot of truth behind it. So
yeah, I took you up on that offer, and I'll second that motion. Good stuff. All right, now on to the disclaimer. No investment recommendation is intended here. Everything that we do is simply us coming together as a group of friends, sharing what we feel is pretty interesting, neat stuff that can be helpful and rewarding in your investment efforts. That's what it's all about. It's literally stacked on 8 decades of experience with the modern investment club movement. The stuff that you see here today will reflect that philosophy and methodology, but please make your own decisions about anything related to investing. If you would like copies of today's slides or any previous session or anything else, or if you have a question, or if you'd like us to kick around a future bull session topic like exchange-traded funds that trade in rare earth minerals, send us an email. Our 2 email addresses are right there on the screen. Anything else, Ken?
No, I think you covered it in a really nice, concise way. So let's keep on moving so we can get you out of here in a half an hour, Mark, okay?
All right. The news is still less than optimum at Portillo's.
Nice way of saying it.
You can, rather than buy a hot dog now at Portillo's, you can now get a share of Portillo's for under $5 a share.
What do the hot dogs run now? Do you know, Mark?
Well, I hope they're raising the prices, and I'm hoping that they're raising those candlesticks down from where they're at. I don't know. I mean, I know that
there's a question for our audience. How much does a Chicago hot dog at Portillo's cost? All right.
I know that Matt Spielman and Ann Manning were recently at Portillo's because they sent evidence. So I'm guessing it's probably pretty close to that number. Anyhow, I know how much they are at Costco.
I've been to fast food restaurants recently, and I'm guessing it's a lot more than that number. Okay.
Well, there you go. Buy yourself 2 shares of Portillo's. No, full disclosure, and we try to remember this all day long as we go through this. I do own just a few playful shares of Portillo's, mostly just to annoy Kevin Galogly. All right. Moving on. All right, Ken, what do you think about the market these days? I
think the market is pretty much doing what the market's been doing for the last 2.5 maybe years, maybe even longer. It seems to whipsaw itself up one day, down the next on any kind of inkling of any change in what might be going on. And as long as we have this uncertainty about what is going to happen in the the country on the larger scale, I think that the stock market is going to reflect fairly average returns, even though there are going to be good days and great days and terrific days, and there's also going to be terrible days. So I noticed that we started out really low this morning, and we've kind of clawed our way back to somewhere near even right now. So maybe it's just a normal old day in the stock market.
Yeah, at least that government shutdown thing appears to be waning, and that uncertainty gets removed, and that's probably welcome to many people out there. I do notice that the activities here in the last couple of weeks or month or so have resulted in the farthest bar on the right actually sneaking down below that long-term trend line. So again, the fact that it's close to that trend line and our return forecasts are all in the 9 to 10% range, that's all pretty normal from our perspective. There are people that are showing up on CNBC almost every morning, especially when those bars are peaking up over the red line, like right there, telling you that apocalypse is coming. They predicted 32 of the last 3 apocalypses on a weekly basis. So
I think, Mark, if you look at the squiggly blue line and the squiggly goldish kind of line there, and you go back 2 years to about December 23, that date's actually on the graph,
yep.
Maybe even December 22, I think that there'd be a lot of folks that would look at those squiggly lines and say, well, that's kind of consistent. That's kind of horizontal. That's kind of flat. I know they move up and down, but you draw a flat line in that 2 or 3 year period, and you don't have that much above and below going on. So it's been a pretty calm market with not a whole lot of participation by the entire market going on.
Yeah, and Ken is talking about the box, and what the box is basically saying is that our approach, the Modern Investment Club movement, as demonstrated here by MyPar, that's the median return forecast for all the stocks we cover, compares very favorably over these last few years to Samuel Bernard's Value Line and the forecasts that are issued by Value Line. So it's just basically saying that those two, we have another graph that we haven't shared in a while, maybe we'll put that out next week, that basically says both of these methods work pretty good in terms of what is forecast versus what is actual for a group of companies, not necessarily every single company, most certainly not every single company.
I find a lot of times, Mark, as we approach big events, and I know we're approaching a big convention in April, that we have a lot of our community that gets interested in pretty esoteric information sometimes, and I just think it does well to remind anybody that's an investor that simpler is probably better in most cases, most of the time.
Yep, I cast 1 vote for simplicity today for sure.
Yeah.
All right. Well, here is our reminder that looking back over a 10-year trailing period, there are a few companies that have done fairly well. The companies listed here happen to be the 10 most widely followed by our subscribers. They would match very closely with the companies at the top of the Better Investing Top 100. But this is where success for investors lives, and we are basically coming together to find the companies that will be on this list 10 years from now, if you want to think of it that way. The one notable on here, Home Depot, apparently had a rough week. It has dropped down into red ink over a 10-year period. And Buttonwood continues to improve. You'll see how it's still hanging out at the bottom of the list, but at least the total return number is in green or black ink now.
Yeah, I would also say, Mark, that Cognizant had been moving kind of up this list, and it's kind of swooned again to come back to kind of meet CVS Health. CVS has been moving up, and Cognizant's been moving back down again. So they're nearly identical to each other. The other thing that I noticed on this slide, Mark, is that in our community, we've become so used to using the word manifest as a noun that when it's used as a verb, as it is in the box below, you have a hard time reading it the first or second time through.
Good point. Good point. Yep. Good stuff. And of course, the core here is that our investing roundtable, which has a couple percentage point advantage to the market over time, and the Tin Cup demonstration portfolio, just a simple living proof. They're both done in full display in the sunlight. You can watch the selections and the analysis made, and they're doing pretty well over time, just showing you, yes, you can invest with your friends and do pretty well. There aren't any guarantees. I don't pretend for a second that you're guaranteed to do well, but your probabilities of success go up a significant amount when you follow the methodology, in our opinion.
I spent about 20 minutes discussing averages and the fact that when you're doing an average, you have to have numbers above and numbers below. I was talking with one of our investors from the Midwest, and I think that the last 10-year period is just demonstrating the fact that you can have an average market over the long term at 10.5% growth, and you can still have 10-year periods that exceed that 10.5, just as you can have 10-year periods that are going to fail at that 10.5 number.
Mm-hmm.
This has been an extremely robust 10-year period with the indexes doing up around 14%. That's a lot, and over the 50 or 100-year period, it's really sticking its head above what normally goes on over long periods of time.
Yeah, I suspect.
I think too.
Go ahead, Matt.
Sure, Ken. I think too. There's a point when you're looking at long terms of reversion to the mean, and I have a somewhat confusing chart. It looks kind of like the old distance grids when you had a paper map or book of maps between cities. But if you have investments from the lost decade, if you remember that, at this point in time, or I think it's at least 2023, those are returning now cumulatively 7, 8, or 9%. So this 14% is bringing those quite closely in line to the long-term average too.
Absolutely, and it's the same thing that we grapple with when we do stock selection guides and begin to talk about setting a high average or a low average PE into the future, and we get constantly having to remind our community that we're not setting an absolute high and an absolute low. We're setting averages, and that means at any given moment you might be above or below those averages at either end of the scale.
Yeah, and there's another thing to point out here. These companies here, with the exception of NVIDIA, but these four are definitely in the magnificent group, they are basically pushing this Wilshire 5000, because it's cap weighted, up this page while leaving this one behind, because they only have a minimal influence on the value line arithmetic average. And that condition actually worsened, as we'll see with the Groundhog Challenge.
Yep, and NVIDIA is only doing it to the extreme. That's all.
Yeah, good stuff. Yeah, this chart is powerful. I think our clubs and chapters should use a version of this in some way, shape, or form to get the message across. All right, so here is the Groundhog standings. For those of you that are not familiar, I'll keep it brief because almost all of you are. We pick 5 to 20 stocks. Most people lean towards 5, and we keep track of them from Groundhog Day to Groundhog Day. You are not allowed to make any changes along the way. So $1 million in Groundhog dollars are invested on Groundhog Day 2025, and you simply ride that wave from one Groundhog Day to the next. And at this point in time, Richard Corkins, with his 1.8 million, is in the lead. But you'll notice, Ken, that it's tightened considerably. And
yes, it has. And I've been watching, Mark, the number of portfolios that are at 40% or better. and it moved down into the mid 40s a little bit ago, and now it's back just under 40 again. Just under 40 portfolios are at 40,000. I'm sorry, 40% or better growth, and you got to stop and remind yourself. 40% growth, heck, 33% growth, which is in the bottom of the list. That 33% growth is fantastic growth. We got to keep reminding ourselves about the extreme growth that we're seeing this year in this contest.
Well, I'd even take it a step further. When you point out the average groundhog has, we'll round it off to 20%. A 20% return. I think I have a 20% return. Maybe,
and that came down.
And that's down. Yeah. So good stuff here. By the way, the biggest number on here, the biggest change in number was the Graham Steffens monkey dropping down to a minus 8.3. I didn't see what failed him, but he's down pretty close to the bottom. There's 209 entries.
Betsy just said yikes in the question box. I think that she was trying to find her name up there where it was for a while, and here it is down at the very bottom in number 50 right now. So, well, Betsy, one of your stocks just tanked. I'm not sure which one, but one of them tanked. Okay.
Sometimes you're better off not looking. Yeah, I spent a lot of time looking for my name on this list and didn't find it. That just means the data is faulty. But.
Well, and there's so many friends on this list, Mark, in the top 50. Our community is made up of some really great stock pickers, and these people that I'm remembering have been doing well in this contest, some of them for as long as 10 or 12 years. So it's not a fluke that they continue to appear in the top 30, top 40, top 50 in this contest.
Yeah, and probably one quick celebrity comment. Jim Booyah Kramer and Abby Jo. I love Abby Jo Cohen. Neither of the two of them have ever won the celebrity end of the contest, and they're here at the 3/4 mark. So maybe this time. All right.
Although, is that S&P call in the celebrity contest, Mark, or is that a different category? Number 19.
We might need a different category for it, Ken. I mean,
okay.
I keep promising to show you guys that thing was mired in last place for months. 209th, and look at it now.
I think, Mark, it would behoove us in the next 2 or 3 sessions to discuss exactly what a put and a call is and how it works.
Okay, but we don't want to give too many migraines as we do that, but it's not as bad as it sounds. And I too have bought, this is what's known as a long-term option going out, in this case, 3 years. And
I just always have been a great believer when you're dealing with numbers and you're dealing with new material, that learning some of the vocabulary is really important.
Yeah.
So,
especially if it crawls any further up the list, we will definitely be explaining what's going on with it and showing a bit of the track record. So good.
Sounds great.
All right. So on to our business for today. The good news here is that the blue line is not down. The Buttonwood balance is pretty steady, right in that $5,000 neighborhood. We have steadily improved the return forecast from the holdings in the portfolio. So that green line is actually still headed slightly north in the way that we think of it, and the rate of return does check in right around 5%. So again, we like just kind of watch this over time, and we'll continue doing that for a while, maybe a little bit less frequently in the future. So 5% return as shown down at the bottom of the page. I think that correlates pretty well with what Ken independently tracked. You want to discuss?
Absolutely, it does.
Go ahead.
Yeah, I'm trying to get. I went somewhere else, and I'm trying to get back to the picture right now. This comes from Quant9 Software's software that you can use to manage a personal portfolio. We had a lot of interest in different tools that you could use to put together numbers on a personal portfolio. What's so nice about this software is that you can create an infinite number of portfolios within the program, and then you can decide which ones you're going to include in which category. So I've created a separate individualized category just for Buttonwood, and I'm just mapping numbers now. I'm taking the broker statement and entering any plus or minus from the broker statement. You know, a positive would be interest payments, dividends, a sale of a stock, and a minus would be the reverse of that thing. And it does everything for me. It took about a grand total of 3 minutes to bring the report up to date over the last 6 weeks. So it doesn't take a lot of time once you have it set up. And if you're setting it up on something that's new, brand new, you don't have to put in all the history either. Remember that the graph is based on capitalization. It's not based on small, medium, and large according to what our definitions of those types of companies might be. So Buttonwood is basically a large cap portfolio right now, capitalization wise, which is very interesting from my point of view.
It is interesting.
Yeah, I do like that internal rate of return number at the very bottom of the right-hand column of 5 1/4. That's not excellent, but it's not negative. So
yeah, looks better in black than in red.
yes, it does.
I'm just curious here. Are you charging us a cup of coffee for taking care of this record keeping, Ken?
Mark, I'm not sure where that comes from, except
I
think
to him backing away.
We have had but we have had some charges because we've had some stocks that are not American companies.
Oh, really? Okay.
Yeah, there are some charges taken for Novo, for example. When they pay us a dividend, they withhold some of that dividend and they charge us some pennies to deal with that. And we've had a couple of instances of actual charges on the brokerage statement. So those are real numbers, the real actual things going on. You just have to be aware of it. That's all.
All right. So it's not a cup of coffee for Ken.
No, it's not.
Here is the portfolio. This is ranked by, I believe, size of position, percent of total assets. You can see the companies that have been fairly good to us. A couple there at the bottom that have disappointed a little bit or are merely starter positions. But what are your thoughts, Ken? I think it's a fairly decent looking stack of companies at this point.
Yeah. Let me use exactly what we would do at a club meeting at this particular point. We would tell each other we have over $100 to spend, and remember, we're only putting in $100 every month, so that's almost a full monthly payment. About 2% of the portfolio we can reinvest somewhere else. And the first thing we would do in a club meeting is we'd go over to the left and we'd check out what my par is, and then we'd check out what the potential annualized return for the portfolio is. That's par. And our goal is to keep that 5 to 10 points above my par. My par is the average return of the average stock in the manifest database. So you add 5 to the average and you're 5 above, and you add 10 to the average and you're 10 above, and that becomes the sweet spot. So 13.5 is darn good. Excuse me, still a little bit short of the sweet spot. Our quality is superb. We don't have to worry about quality in this portfolio. Our growth, we've been hammering away now for over a year about how we've discovered that if you're really going to hit that goal of the sweet spot, you need growth to be somewhere, we think, at least around 12.5 and maybe as high as 13.5 or even 14. So our growth has become much more robust in the last year. But I still think that we need to focus on that growth number of 12.2, and if we can possibly maintain it or raise it, I think that's a good idea. PE ratio still under 20. I think that's pretty reasonable for a high growth portfolio. Yield, we don't worry about too much. That's just cherries on top of sundaes all over the place. We'd love to keep financial strength and earning stability at the 80th percentile or above. And so we can give ourselves check marks in those two categories. So all in all, we have a good solid A- in the portfolio. It just has to start to follow what our predictions are, and it's beginning to move in that direction. The portfolio is actually up over 1% today. I probably just jinxed it, but I've noticed in the last 2 or 3 weeks that it started to move ahead of the S&P finally, and that's taken a long time for that to begin to happen. If I were finishing the exercise that I just started with my explanation, I would be looking for any company that, first of all, could take a little bit more in its holding. This is a 15 stock portfolio. An average holding should be about 7% or so. So any of the holdings from, let's say, maybe Novo and definitely Raymond James on down, we could add to without upsetting the apple cart too much, without increasing the size of the tail on the dog. So I would be looking for a company that would increase the par and at the same time keep the growth at the same number, or maybe even increase the growth. And I found one company that meets that criteria. So I'm going to suggest we consider at least putting half the money into Green Brick.
Okay.
And the reason is that it has sales growth of 13. That's above 12.2. And it has a par at almost 30. That might be too good to be true. So let's say it's only going to be 20 instead of 30. And that 20 is still above the par in our portfolio of 13.5. Right. So I'm suggesting at least half the money, $53 or so. Maybe we could do 1.11 shares and turn Green Brick into 6 shares even, Mark.
Let's think about that. That sounds good to me. The one thing I would point out with Green Brick, if you do your own study and you audit, it would be very natural and normal for you to end up with a growth forecast of 10, 11, maybe 12. I do think there's a little bit of enthusiasm built into that, or exuberance built into that, and that would bring it down closer to a more normal return forecast, and that would be absolutely okay.
Yeah, the one number that I've come to increasingly rely on, Mark, isn't appearing at the moment on our dashboards, and that's the proof number. So I would want to check out the proof number as well.
Yeah, I'm sure that the proof for Green Brick is lower for sure. So yeah, that could
29.8.
What is it?
29.8%.
Oh, so it's higher.
Yeah.
I'm thinking of a different company. All right. So
the other thing I would say, as now an owner for several years, so certainly home builders, and they're doing better than home owners who are trying to sell their house, have been slowing down in terms of activity. You have to look at or separate activity from profits. Homeowners have not only been building fewer houses as the market has sort of seized up, but also building smaller homes.
Sure.
So revenue can go down and you can still make more money on it. But also, I don't know what it is right now. Green Brick has built up quite a cash pile, and they did that explicitly looking into the downturn to potentially make acquisitions of convenience. And this is a company in how long ago was it? 2022 or 2023, bought back 10% of shares in 1 year. So that can be material. Either to use it for acquisitions or to use it for buybacks. They're not afraid to act big in those points.
So Matt seconds the motion, Mark.
Well, I will not say no. I have plenty of Green Brick myself. I will not say no to buying Green Brick. They have $142 million in cash.
We also own shares of Green Brick, so we're familiar with the company, and we simply like the strategy and the excellent execution by their management team. So that's one of the reasons. Now, I was going to suggest that maybe Novo, in recognition of the commitment to long-term investing, because you'll see on the next slide, Novo is one of our more disappointing selections. Matt went so far
You
as
are
to
so
suggest
kind.
maybe you buy Novo just to celebrate the fact that they lost a bid to buy that other.
It lost a bidding war. Always celebrate when you lose a bidding war, because that does not make the business case better.
So we could do that. We could add a trifle of Green Brick and maybe another share of Novo just to reaffirm our commitment. Gentex is on the hot seat because of their lower growth forecast. We actually will. We have promised ourselves we will give it a strenuous selling consideration if it ever hits an RSI of 70. You can see that that's currently not the case. They have had some decent moments here in the fairly recent past, but the quality rating it manifests in the database is kind of screwed up right now, so I whited out that column. So Ken, I know that it's probably giving you the heebie-jeebies, but it'll be back. In that spirit, I also should point out to the audience, those of you that are here and are aware of this, we are migrating to the value line data for our data feed, and let's just say it's not going without its hitches along the way. How's that for sugarcoating it, Ken?
Okay.
I
You know that I don't have to repeat what I've said again about Gentex, but I just feel that it's a great company in a terrible industry. So
I would love to see them do some type of really strategic, intelligent extrapolation of what they do very well, and maybe they will, but we'll see. But I'll second your motion. So a little more Green Brick and conviction vote on Novo, and I don't think anything else is in here is in terrible jeopardy of causing us any grief. And we'll look at this a little bit closer. One other comment on the quality rating, one of the reasons it's kind of messed up is as we went away from Y charts, we lost a component of the financial strength calculation, and that's caused a bit of a disruption. So you're going to see some what I would consider to be a fairly gentle disruption in the quality rankings and scores, core scores for the companies. But I'm also looking at maybe it's time to add back in a Morningstar Financial Health or something, just to give it a little more granularity. But I just kind of glossed over that. But that's one of the things we're working on fairly diligently right now.
I will say, I don't know if we talked about that here before, but for those of you who might have avoided Morningstar or been kind of frustrated with them, they've recently added a new report, which is very similar to the Value Line report, with their own 5-year projection. So not Morningstar ACE, but their own Morningstar calculated 5-year projection when they have analyst coverage. Very interesting. We just went over that in a beginner SSG class that we closed out, but it was a new discovery even by the teaching team. That's what helped.
We have to be careful on that, though, Matt, that it's not as it doesn't cover as many stocks as you might initially believe it covers, that new coverage.
Correct.
So you have to be pretty careful. It's not as you're not going to be able to find it for an awful lot of companies. Let's put it that way.
But you also don't have to hunt and peck through the analyst comments for tidbits anymore.
Exactly. Yeah.
Maybe that's a segment of its own. You guys think?
Could be
at a future session. Okay. The other thing I wanted to point out is on the previous slide, some of you may have noticed. Let's go back. Relatively low projected annual return. That doesn't reflect the current update that we just completed on issue 13. You can see that this number here is fairly dramatically different, and that one reflects all of the most recent upticks in expectation for many of these companies. although Kim and Matt were discussing the fact that 20 to 28% of Oracle's earnings might be fake.
Only by 2028. It'll grow.
Through 2028, okay, after that?
No. It's growing up into that. So
okay.
It could be worse by that point. But that's now as an forum post in the general discussion for those.
Okay. Go there and look and see what those guys are concerned about. I'm concerned because Oracle is one of my groundhog holdings.
Well, see, then 2028's so far off. Just don't pick them again.
All right. Consider the transaction complete in Buttonwood, and we will take care of that. Just thought we would spend a few minutes. It is 2:40. We're doing good on time, Ken. Jeannie Robeson from Illinois, Heart of Illinois chapter, sent us an issue or two of this Upside publication. It's actually put out by the same company that does the Dow Theory forecasts. Only this one is completely focused on small and medium-sized companies. I sent one to Ken, and he nearly lost consciousness at some of the companies that were mentioned, including this one here. And what you're seeing here is their weekly service, part of the service to the subscription. I'm not even sure. I think the subscription might be, someone can probably tell us from the audience, $100 or $150 a year. So that decision is up to you. But the fact that they were talking about so many companies that were of interest to us clearly caught his attention. I started a 30-day trial just so I could explore a little bit deeper. So they do have a free 30-day trial. You might take a look at that. I am not being compensated by Richard Moroney or Dow Theory. But again, these are some companies that have been interesting. And Ken, this one passes your test, right? Companies that...
Absolutely. I'm looking. I own not a half dozen, but I own 3 or 4 companies on this list, Mark. So I'm very, very pleased with this source.
Yeah, and many of these companies have been mentioned at roundtables or were candidates for the best small company. So when we see a newsletter like this written by some people that we know and have respected over the years, you never know. I've had a pretty good run with the Motley Fool stock advisor service over the years. And this is just another one. Just thought we would bring it to your attention. If you search on that Upside publication label, you'll find it. If you can't find access to the free 30-day trial, I will put a note in the forum, and you can see what you can figure out from there. Anything else on that, Ken?
No, except, Mark, if you'd go back one slide, I noticed Halo's on this list as well, but here's Halozyme Therapeutics at the bottom right there, and I just wanted to update you. I first brought Halozyme to the roundtable, I don't know, 4 or 5 months ago, and then I re-brought it to the roundtable 1 or 2 months ago. But Halozyme is starting to actually advertise on TV without using its own name. If you're watching the television advertising talking about drug therapies that you can now do yourself at home and make it more convenient, save you time, and do it in a more timely fashion, that's all Halozyme patented technology, and they're getting royalties off of all these different medications that are now telling you you can do your own injections at home instead of going to sit for an infusion in an infusion room or a hospital somewhere.
Good stuff. Definitely worth digging in, and it is among our small companies for 2026. And it's a roundtable company also. All right, so with that, we'll just remind that we do archive all of these sessions, whether they are roundtables or bull sessions, or in the case in the upper left, that's our best small companies for 2026. That's the actual disclosure of the 2025 results and 2026 selections. Our 20 companies are actually off to a pretty good start, and we'll cover those. We might we'll show you where the dashboard is, but Ken will only let me spend 15 seconds on it next week. And we'll get that get that out there. Again,
Mark, our mailing for the roundtable went out late last night. Most of you should have it in your email right now if you're on our guest list, the Mid-Michigan chapter guest list. And I just want to remind folks that the November roundtable will not be the Tuesday before Thanksgiving. That's just too busy for most of us. It will be the Tuesday after Thanksgiving. And this year that happens to be December 2nd. So if you're putting it on your calendar, make sure you put down December 2nd for the November roundtable.
and you know how I said I was being pulled in 18 different directions, Ken? I found out just a few minutes ago that I'm the one who's responsible for the Thanksgiving dinner for a virtually indeterminate number of people.
Well,
you know what that means, Mark?
What's
You
that?
just go to your local grocery store and order a Thanksgiving dinner for XYZ.
just call the Bavarian Inn, Mark, and tell them you're bringing up a group of 40, okay?
I'm handing out Domino's pizza cards. You know, I looked at her and I said, "Are you kidding?"
Marie says, Mark, it sounds like potluck, you know.
Thanks, Marie. All right. And for one last moment, again, a salute and a nod and a hug of appreciation to any veteran you know. Please tell them we all love them and appreciate in unmeasurable ways the things that they've done. All right. That's all I have for today, Ken. Anything else?
Nope, sounds good, Mark. I have the same duties for Thanksgiving as you do, but my group is only 14. My group is only 14. It's not infinite.
Yeah,
so,
but the major difference is you knew they were coming. That it was coming.
Yes, and I volunteered.
You volunteered. This is important.
Good afternoon, everybody.
Good afternoon, everybody. Have a great week.
Bye-bye.
Bye-bye.